Swing Pony here. Welcome to the Place Your Trades Network, where we discuss trading daily options using the CME Group's event contracts. These give us access to 10 different futures markets, including the E-mini S&P, NASDAQ, natural gas, copper, gold, and more. The great show ahead. I'm really excited to have John Carter join me today. If you're not familiar with him, he's the author of Mastering the Trade, and he's the founder of simplertrading.com. I have seen a lot of people out there using some of his strategies and his indicators. I see the TTM squeeze a lot. I see people utilizing the tick chart. Our focus today is going to be more on the psychology side. We will get into a little bit more of the strategy later, but I've been reading Mastering the Trade, and just the way that John is able to discuss his experiences and the humanness of a lot of what we as traders go through in terms of the emotions behind trades, the impulse reactions, the boom and bust cycles. I think he's going to be a really great guest to talk us through some of those experiences. Before we get started, this broadcast is brought to you by Tradeovate. They're the ones who've created the custom app that we've traded these event contracts on. If you're not familiar with event contracts, they're really fantastic. Basically, yes-no contracts that allow you to take a position on where the futures markets are going to close at the end of the day. Check them out. They're a lot of fun, and they're fantastic for days where we have like economic events and really big range and volatility to work with. All right, let's go ahead and get John Carter out here. Hello.
Hi, how you doing?
Good. How are you? Thanks for coming on.
Absolutely. It's always fun to talk trading and psychology.
I am actually 2/3 of the way through Mastering the Trade, and just like everybody else, I love Mark Douglas, Trading in the Zone, Disciplined Trader. And then I read your book and I was like, wow, this is somebody else who can like truly articulate the psychology aspect in a way that's like very relatable and understandable. And the way that you put, real life analogies into everything was just, it made it such an enjoyable read.
Well, I appreciate it. I think it's one of the things that at some point that I learned along the way that, the first 8 years of my trading journey was really tough, lots of ups and downs. I was like, wow, I know there's going to be other people out there that want to do this. And if I can save them from this crap that I had to go through and just at least shorten that learning curve a little bit, it would be worth the effort to squeeze out a book.
Totally. No, there were a lot of aha moments. Unfortunately, some of those moments you didn't save me from, I've already been through them. So they resonated quite a bit, but
it builds character.
It does build character. And I think it just sort of reiterates the human experience within this whole realm of trading, because there are a lot of people, there are even some people who say psychology doesn't matter, which is insane to me. But I think, you talk about mastering the trade, and then there's also mastering yourself, which is such a big part of this experience and journey. So one thing I want to talk to you about, you talk about being relatable, and a lot of people have gone through blowing up accounts and starting over, and you had quite a bit of a boom and bust cycle yourself. So I've read that, you basically took a $10,000 account to over $100,000 3 times. And probably the last time that you did it, in the book, you shared the story about the down payment in the house in Minnesota. And that was the most, wow, like impactful kickoff, like a very striking story. Can you share that with us?
Yeah, it was so painful. It's hard. I think the reason it was painful and the things like this that you learn over time in trading is that anytime that you set your expectations for one thing in the markets and you get locked into that, and then the outcome is so different from that, it can be shocking. And so that's an example of that. Now, we've all been trading long enough to know that not every trade works. So it's kind of like, oh, that trade didn't work, that's fine. But there's a difference when it's like, okay, my expectation in the situation was I'm going to have no problem making 30 grand in a week or 2 weeks. And I'm going to do this with options, and I'm going to get the down payment on the house. My trading accounts give me the same, and I'm going to live happily ever after. And it was like, that was the vision. And I was so, Tony Robbins, positive thinking, you want to visualize your success,
Sure.
all that kind of stuff. Right. And I was so locked into that I ignored the market. So I did my thing and I projected my will on the market. But the market, it's like if you're swimming, if you're body surfing is, and a wave comes in and you try to push the wave back, it's not going to work. The wave's going to push
Right.
right over you, right? So, and that's what I experienced. And it was so, I was so in denial that it wasn't going to work that I literally sat on this position until it went all the way against me. I had $150,000. I was going to originally risk 10% of it, 20% of it in options, make 30 grand. I ended up going all in. And this was such a long time ago, like the mid 90s, but it may have been the start of the big bull market in the 90s. And, from there it was a downtrend. It reversed into an uptrend, but it was a week straight of prices that gapped and just kept running, which I haven't seen, in a long time.
Mhm.
And at that point, I'd never seen, and it just destroyed me. And I just had to figure out, like, wow, the reality was not only is the money that I wanted for the house not there, but my trading account's gone. We don't even have enough money to get the house. And I was at that point, I was so horrified of telling my brand new wife this. Or I
Yeah.
think we weren't married. I think she was a fiance at that point. Either way, it was close. I just couldn't face that. Like that was something that was even psychologically worse, having admitted that failure. And so, figured out how to scramble together some credit cards, talk my way through the closing, just act stupid and get the house. And it took a long time to recover from that. And but it was one of those things where, I took 6 months off from trading. That's when I discovered Mark Douglas's books. And the short answer to all that was that, when I was focused on the money or a specific outcome, which was more, more accurate,
Mhm.
bad habits just naturally happened. But when I focused on the setup and the process, the money would follow. And it's just always been my mantra ever since then.
For sure. No, I think that's very relatable because there are, people who set certain account goals, they set certain daily profit goals, and it's good. It's not saying don't have a goal, but it's saying like your goal shouldn't be the focus to the extent that you completely lose sight of the process. I know that you mentioned like the first couple of times you blew up those accounts. What happened is you would go from 10,000 to 100,000, then you're like, all right, I'm going to turn this bad boy into 1 million. 100,000 to 1 million, no pressure, right? So what that does, I think, is, like you said, you lose sight of the process because that's such a big gap. From 100 to 1 million is like a lot. You're going to have to do some crazy things to get there, when you put that pressure on yourself. And I think that also reminds me of sort of people when they do come from a drawdown in their account. And instead of just looking at like, okay, that money's gone now, let me start rebuilding from here. Let me start chipping away slowly. They put this pressure on of like, okay, my account's no longer at all-time highs. I have to get it back to what it was. And that continues the downfall.
Yeah, and there's the couple of things that come up like that, and I think inside of us we all have this kind of self-image of what we're worth, and I think that in trading we regularly test those limits. And when I look back at that, the things that I think really happened was when I got to $100,000 in that range, I was like, I mean, that was like a lot of money, and it was just like, oh
Sure.
my God, I can't. This is a crazy. And I think psychologically, I just wasn't worth more than that. Is what I think. That's how, because who know, and part of it's pride. Pride
Of
can
course.
step in, and pride and disillusionment is probably the number one death knell of traders. You go, oh yeah, euphoria, and then phew. But
Mm-hmm.
these psychological barriers, what's great about trading is that you can go talk to a therapist, you can talk to your friends and try to figure out what's going on in your life. The market tells you exactly what's happening. It's like you've reached your psychological threshold of what you think you're worth, and that's why every time you get to this level, you do all these stupid things, and you come back down to the level where you feel that you're worth. And I think that's just it's a constant thing that happens in the markets. And so part of the key is expanding what you think you're worth, and how, and sometimes it's as simple as, oh, I'm just going to say some positive affirmations, but really it's the numbers, and it's getting used to larger and larger numbers. And I heard
Sure.
one time talking to I was in an audience and I was listening to John Paul Giorno. That's probably not is how you pronounce his name. He did the hair salons and the tequila Patron.
Okay.
So somebody in the audience asked him, like, well, what's the difference between being a millionaire and a billionaire? Except he was a billionaire. And he thought for like 30 seconds and he just said 3 zeros. And that was his entire answer. I thought that was always interesting. And it is just kind of
Yeah.
like, okay, instead of 100,000 being a limit, what if a million is the limit? And then
Mm.
just kind of going backwards, from there.
Interesting. Yeah, no, I think self-worth comes up quite a bit, especially, as we sometimes give away money and we like don't understand why, your relationship
Mm.
with money, whether it's growing up, whether you think, money caused fights growing up, there were money issues in my childhood. So one thing that I had to talk through with my therapist was like sort of this preconceived notion that in a way that money is bad, you know,
Mm.
growing up with debt, having it cause fights with my family, leading to divorce and things like that. So there was a little bit of like, maybe sometimes you're finding opportunities to give money away because inherently you actually kind of have this negative connotation towards it, which I thought was fascinating. Fascinating stuff. And I know you say that like the market is the best psychologist and that really it brings up like all of the traumas and the emotions that are stored in our body that we haven't dealt with, the defense mechanisms, the survival skills, the limited beliefs. Can you tell me a little bit more about what you mean by all of that?
Yeah. So what I've found in the markets is that if we're conscious, so we're always our true self when we're flat. Like I'm 100% cash, I have no
Mhm.
positions on, I am me. And to the extent that we, put on too big of a trade or use too much leverage, we become less and less of ourselves and our unconscious takes over. It just
Mhm.
steps in. And what'll happen then is that your body automatically goes back into childhood survival skills. And so I know growing up, like my parents split up, there was a lot of fighting. My dad was an alcoholic, and there were things like, okay, to survive, I needed to not be noticed or keep the peace or, blah, 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 blah. Everybody has their list, right? And those would be the things that would come up. And so one of the things I think that really comes up in trading, what's really weird, is none of us go into trading to lose money, and we can all imagine how great it would be to have all this money. But then when the money comes, it brings up a whole new level of responsibility that we were never aware of. Oh my God, what am I going to do with this?
Mhm.
What burdens is this going to create? And this is all, under the radar, and that can cause us to start doing things to sabotage that. And sometimes too, and I've noticed where, if I've gone through and pushed really, really hard and went through and had a tough time, there's almost a sense of relief, like, oh gosh, I can finally go back to paying attention to my kids, or stuff like that.
Mm.
It's real subtle, but I'll notice it and just be like, okay, well,
Sure.
that's messed up. Let's get back into just following the setups.
Yeah, that's fascinating. And I know you've said before that addiction is essentially an outlet to numb the pain.
Hmm.
Do you think, in this environment where more and more people have become day traders over the last few years, more and more regular people have access more than ever over the last few years, do you think that there is some form of like addiction to trading or a need to over trading or people becoming more susceptible to that when we can just pull our phones out of our pockets and pull up any of these apps and continue to have access every day? I know a lot of people feel the pressure to trade every day. What are your thoughts on that?
1,000%. So I noticed this for me, and I've talked to other traders about this too. But a lot of times for me, if I'm in a trade, my mind is pretty calm. Like the act of putting on a trade, it whatever chemicals that releases dopamine and stuff like that, it feels
Mhm.
good. It's calming. It forces everything else out and just kind of calm. And that's an addictive thing. That's like
Right.
having a shot of tequila can be calming or whatever, whatever the list, there's a long list, right? And so it's trying to find those healthy habits, like go to the gym or go for a walk. But I think that the extent, and I find this over and over and over again, and we were just talking about this the other day, is that a lot of times the best trades are the ones that you don't take. Okay. So what does that mean? Okay. So if you go back and say, if you're a day trader and you're like, slinging in and out every day, 20 times a day, and you go back and look at that, man, I wish I just didn't do those 3 trades. This week would be so much better without those 3 trades. And if
Right.
you go back and think about it and look at it, the reality of it is, let's say that as an active day trader, somebody did 3 trades a day, that's 15 trades a week. Maybe there were really just 3 good trades that week. Can you get disciplined to the point where you don't trade? It's
Mhm.
like, I'm going to recognize what was the common theme of those 3 trades that worked out really well. And now I'm just going to identify those moments in time and wait for them. And I'm not going to piddle away my chips, out of boredom while waiting for one of these setups to come up. And it really comes down to that, just being able to understand that the need to trade is kind of a chemically induced function in your brain
Sure.
um, versus knowing exactly what it is that you're looking for and being patient and waiting for it.
Because we've all taken the boredom setups before, we've all taken the impulse trades, and I think the more you get accustomed to doing those things, the more you're gonna continue to do them. Like, it really truly becomes a habit that becomes very hard to shake because now you're, like, hardwired to continue taking trades that aren't a part of your setup, aren't a part of your plan. And then, one of the things that I think comes up a lot is that when you take a trade that's not a part of your plan, when you break a rule, that bad habit could potentially get reinforced on the one-off occasion that it does work out. So, you know what? I didn't take my stop. I pulled it because I thought this thing might go back up. And guess what? It did. I ended up making 80% on this trade. What's going to happen next time? Next time I'm in this situation, I'm going to think, okay, you know what? I was able to pull my stop last time. I had a killer trade. I could probably do that again. And guess what? It's not going to work out the same way. But you now have the belief that I can get away with breaking my rules.
Yeah, and things like that, they could work 19 times out of 20, but it only takes one time.
Mm-hmm.
And that's the tough thing with things like that, is it only takes once. And the other thing too is that when we chase trades out of boredom or like whatever it is, it's like, oh, let's see what happens here. The other thing it does is that I think there's a thing that you can only, as a human being, you can only make so many decisions before you reach decision fatigue.
Right.
And this is why I've seen a pattern of people, traders tend to make money in the morning, give it away in the afternoon, make money in the first half of the month, give it away the second half of the month. But when we're in a trade, what's happening now is our attention is focused on that trade. So if it's a mediocre setup, we're actually now distracted and we're not going to see the great setup that's coming up.
Right.
So not only are we distracted by this thing it may or may not work out. And if it works out, it's reinforcing a bad habit. If it doesn't work out, it's like, okay, my account went down. But it's blocking us from the opportunities, the real opportunities that are there. And it's just so important just to learn patience. One of my mentors, she was this amazing S&P futures trader, and she just said she was a commodities broker for a long time, and so she watched all these clients and all their bad habits, and she just said that, and went eventually to trade on her own. And she just said, John, there's no trader on earth that's born with the patience gene, and you either learn that or you don't, and if you don't, you're not going to make it. It's like, it was fascinating watching her because the market would be going insane. I sat with her, for a couple of weeks, and she'd do like 2 trades.
I love
And
that.
I'm just dying, like, but
Yeah, you're getting the itch. You're like, I gotta push some buttons. No, that's so relatable. I actually had Pax on a previous episode, and he was saying, I've gotten to this stage in my career where if the market runs without me, like, it's fine. I feel okay about it. He's like, I went into the trading pit and I was, I had taken the day off and there was a huge, huge down day. And I thought, oh my God, I would have killed that setup. I was totally prepared for it. And there was somebody in the pit who's like, no, you could have been just like me. You could have gone the complete opposite direction and wrecked your account.
Mm-hmm.
Like, you could have lost a ton of money. And he's like, that was the moment where I realized, you're right. I could have been around, but I could have fought the trend. I could have, taken the opposite trade and been totally screwed by it. So there really is sort of an empowering aspect of like accepting the fact that the market provides opportunities every single day.
It is, and there is something relaxing about missing trades. I found too, if I'm really in a rhythm, I'm typically not trading every day. It's Tuesday,
Okay.
Wednesday, Thursday kind of a thing. There was one time, I remember, this was a few years before Mark Douglas passed. We were working together, and I had like 100 call options on Google before earnings. And what we did with earnings was, we'd set up a trade and like a run up into earnings, and it's like, oh, this option doubled, so I'm just going to sell half. I've got my money back, and let's just hold these through. Google exploded, and these options went from like 3 to 120. It was insanity, and it was just like, oh my gosh. And I immediately, when I got out, I was looking around, I saw Amazon. I just took this huge trade in Amazon options. I was just like, oh. the last time I talked to Mark, he's like, John, the next time you find yourself doing something like that, call me. So like, I text him like, can I call you right now? He's like, yeah.
Yeah.
So he just had me talk through he was like, well, I said, I'm feeling like euphoric. And he's like, no. And he's like, yeah, okay. He's like, you're feeling euphoric. You're feeling invincible. You can do no wrong. He's like, okay. But he's like, it doesn't mean that the trade you're in is wrong, but your position size is screwed up. I'm like, okay. And so while I had him on the phone, I just sold down to what I would just call a normal position. And it was fascinating because those are the kind of things that unconsciously can just take us over. But it was fascinating to be able to go through it in real time and just kind of understand like what was happening.
Yeah, you're right. There are moments where it's sort of like your fingers are pushing the buttons, but you feel like you're not actively making the choice, and that's sort of the most dangerous time, I think.
Absolutely. We always joke it'd be great to have something on your keyboard that if it recognized you were doing something that was out of character, that it would give you an electrocute. It'd electrocute you.
Oh, I've thought about a human shock collar before. I'm like, it works on like dogs, I think. Like, would it work on me? Who would control the button? So I have a question for you. A lot of traders, they have this aspiration: when my account hits X, I'm going to be happy. When I land this dream job, when I get this car, when I get this house, sort of a bit of like a destination addiction, thinking that, happiness is at a certain level. You've had incredible growth in your career. You've reached a lot of milestones. What would you say to people who think, I will be happy when X happens?
So it's a really great question, and it's very, very tough to get our arms wrapped around. So one thing I learned through this process is that now at some point, if you're sitting there and you've got, say, a $5,000 account, and you can get to where you've got a 6-figure account, right? And this is money that you can live on. That's a material difference. And at some point, we got to acknowledge that there is a material difference between, wow, I've got a large enough account where I can generate enough money that I don't have to work. And that to me is okay. From there, though, it gets really dicey because it's so I did this was before COVID. Flew to India and did a crash course in the Bhagavita. It was like a 10-day long kind of a course there. And it was this was in Pune, India. And the thing that really stood out to me there was that whatever it is, so when we're, say, pursuing happiness, and the example the guy gave was, all right, so you're poor and you don't have a car, and but you get a bike. Okay, great. But you got the bike and you can get to work, and that's great. But then after a while you're like, oh, this bike's not good enough, I need a car. And then you get the car, and after a while that's not good enough, and I need the Porsche. Okay, and that's not good enough, and I need another car. And what was interesting, though, is he said that actually process never ends. He's like, you've got it's this energy of desire, and you can never throw enough logs on that fire, ever. So if you're unaware of it, what happens, the pattern is it's more and more and more until you crash. And so this happens with traders, this happens with business entrepreneurs, where they keep going, they leverage up until circumstances wipe them out, or they die. And that's the only path that leads to. And it was kind of scary, but really got your arms wrapped around the idea that happiness is, and I know this is so cliche, but happiness isn't out there. It's in here.
Internal.
It's internal. And so it's the idea of waking up. And I never really understood this when I was younger, but it's waking up and just appreciating the opportunities, being grateful for the opportunities. And then what happens is that the need goes away. I need this to be happy. I need, and that's the thing. It's a fine line, because I think that, if you really look at that philosophy, you could say, well, I don't need anything. I could just go sleep on the beach and be homeless and be happy. You could, but that's also not, my dream either.
Totally.
Sometimes that sounds nice, right? But it is just kind of being careful of, what's the difference between a goal and an obsession? What's the difference between a goal and becoming a slave to this energy of desire? And just, where does that end?
Yeah, no, I think that's a great story. I have been focusing a lot more on like the internal, because I think we do a lot of times look for external cues for happiness and validation. And that could even be, the size of your account, the compliments you get from other people, the material things you own. But, I've been through my own experiences, even with like work and getting certain promotions, and thinking like, oh, I would have killed to hit this milestone like years ago. Like I would have thought like, wow, this is the ultimate joy and happiness. And what I learned pretty quickly is like, as soon as you hit each milestone, there's a little bit of like, okay, what next? And that, okay, what next? Having a few of those in a row was a moment to take pause for me and realize, this really doesn't go away. So like it's sort of accepting and appreciating what I have now and being happy with that. Doesn't mean I can't continue to have goals, but it's just a reminder that like there is no final destination for happiness.
It's really, there really isn't. And that's actually, what you said there about just the idea of recognizing like, oh my gosh, I finally made it to this point. And then literally 48 hours later, it's like, okay, now, and then whatever drives a person to that place gets replaced by the next thing. And then it's, we're back into that energy again.
Yep. So I want to ask you one more question before we sort of dive into strategy a little bit. In terms of your personal like routine, anything to reinforce like mindfulness, being present, what does life outside of trading look like for you? Like what do you do in your everyday, that makes you a better trader?
So I do think that the longer we spend in front of a computer, the worse, the worse almost we can get as a trader. And this is really for discretionary, and I'm a discretionary trader. I've got friends that are mechanical traders. They're like, they don't talk about their feelings because all their trades are mechanical.
Sure.
But I find that to kind of get grounded, I have to be outside. So either walk in trees. So I like to have, I like to be around animals because animals are just always present. So we have these crazy, deer, kangaroos, zebras, horses. And what I find with them is if I'm interacting like with a deer or a kangaroo, what's great is that they're present. They're not sitting there worried about, something in the future. They're not dwelling on the past. They are present. And if you're going to be able to interact with them, you have to be present. And I find that just fascinating. It's kind of a recharge. And in the markets, you have to be present. You have to, you have to be mindful and you have to be present if you're going to, really make it work. And so I find that that's just a kind of a constant reminder to do that. So just being outside, I like to typically get away, we'll do either yoga or go to the gym like during the lunch. So I try to do trading in such a way that that's possible. I'm not going to throw on all these huge day trades and then go to the gym because that would be irresponsible. So
and stressful.
And stressful, right? So it's just trying to structure a life around trading, not not live for trading, but structure a life around being able to trade.
I like that because I think a lot of people do it the opposite way, right? Like, because trading can become very all consuming. Like my life is trading. I'm not going to hit the gym at lunch because I have this trade going on. I'm not going to, meet somebody for dinner because I'm so burnt out from my trading day.
Sure. Yeah.
Very,
Yeah.
very.
And now there are things as a trader that, when somebody's like, hey, do you want to go have lunch? I mean, most of the time the answer is no. It's
Sure.
like, let's go. How about 4:00?
Totally.
So there are things like that where it is kind of, structuring things like that. But I do think that, I go back to the idea of like, one to two well thought out, well planned trades a week is really all you need. The key part there is well thought out and well planned, and not like, oh my God, look at the shiny, look at that shiny, let me grab it. And it's just one of those things where too, I also understand and have been trading long enough to know that if I do overload, how that's going to impact my day. I'm not going to be able to be present for my kids. I'm going to be thinking about my trades, and it's like, is that worth it? And so it's just, and it depends on the market too. Like I generally like holding trades overnight. This particular market right now, it's not really that fun. You either wake up and it's great, or it's just like, wow, that was not expected.
Totally.
So, the markets are constantly changing too. And so you just kind of, want to be sure to adapt that way as well.
Yeah, so that's a great, I think, pivot towards sort of talking about the current market and the strategy. How has, the last year and this year treated you? Like, has the market been what you expected? What kind of trades are you putting on? Because I'm with you. Like, I love swing trading. Love. It's so much more peaceful. Day
Absolutely.
trading, it's fun. Sometimes it's exhilarating, which is a word that I hate to use because I think that's not a good thing. I don't like feeling the peaks and the valleys and the rush. And I'll admit, with day trading, I'm not as like zen and calm and neutral as I want to be, just because The trades are a bit more emotional, but, sometimes I joke, I kind of feel like Obama, like, his first term, and then after his second one where he's, like, gone completely gray, like, that's a little bit what day trading feels like sometimes. So how has the market been for you? What are you doing? Are you swinging? Are you day trading? How are you managing this?
It's a good analogy. I know, if you look at like 2020, 2021, even the volatility in early 2020, I mean, that kind of stuff is kind of fun. It's just like, all right, we got a high VIX and we're doing all this kind of stuff. And
Mhm.
so what's interesting is in 2022 is that it was, and part of this too is kind of like I've just watched and studied like the markets, like how they've changed with like 0 days to expiration, SPX and stuff like that
Mhm.
too. And it has, especially in the last hour. And so what I've found personally is that I still like swing trades, but generally, looking at time frames that are, say, hourly charts, 2-hour charts, 4-hour charts, where it's things that you might just hold like for a couple of days.
Sure.
And I found too with day trades that if you really haven't made your goals by the European close, so typically 10:30 Central, don't try after that. Like it's not worth
Mm,
it. So there's that opportunity in the first 2 hours of the day for, one or two solid setups, and then just there's really no reason to day trade after that. If you're doing options, there's sometimes, maybe some kind of, the asymmetrical risk trades, like a risk 1 to make 10 butterfly. Hey, maybe this is going to pin at 4,000.
sure.
So, if it doesn't work, no big deal. And if it does, it's nice. But there's something to be said in the markets where, make your money and get the hell out of there. And
Right.
that's what I would say that this kind of market is.
Okay. And then we are in a very macro heavy environment, right? Everybody's constantly talking about the rate hikes, about inflation, we've a lot of current events too, like the situation in Ukraine, like there's just so much and it feels like every single economic event matters. How do you manage, the macros and how much do you pay attention to them? Because I do think sometimes it's a fine line between like being aware of your surroundings, understanding the current climate, but also not letting it affect your bias in trading.
Yeah. So the toughest thing I've seen right now, um, I think for newer folks that are kind of going through this is that, oh my gosh, the news is bad. So that means that the stock market has to go down every day.
Right.
And of course, the stock market and the economy, and the news are three, completely different things.
Mm.
But I do think that the biggest thing is just really understanding and appreciating the difference between QE, quantitative easing, and then tightening. And in quantitative easing, all assets go up. So, you buy the dip, right? And in quantitative tightening, not all assets go up. Some get destroyed. And it's really just understanding and appreciating that. I'll get a lot of questions about Bitcoin. I personally, and I
Mm.
could be dead wrong on this, but I personally don't think Bitcoin is, going to see highs again unless and until we go back to aggressive quantitative easing, because that's the kind of stuff that will cause that common asset. Now,
Sure.
if you're a Bitcoin purist, I know all the arguments, why it's going to go to a million regardless. But I do think that quantitative easing, it's really just understanding that work. Now, quantitative tightening, or we're in an interest rate environment. That's awesome for some companies. And so I think a really easy thing to do in this environment is to look at stocks that are making new all-time highs. Though it's an easy filter
Sure.
to say like, wow, these are companies that are doing well in this environment. I guess I'll swing trade those. So then a question will come up is, well, why focus on the long side? Why not short tech stocks or something like that?
Right.
I'm a huge fan of shorting stuff, but in what I've found generally, here's the worst thing. So let's say you're bearish on the market and you buy puts on Amazon. Market goes down, Amazon releases news and it pops up that day. You're like, oh,
Mhm.
I was right on the market, but this company threw me, an audible. This happens all the time. So if you're going to be bearish, just focus on, the Qs and the spiders. That's it.
Yep.
You don't need to do anything else. It makes your life easy. They're liquid. And then on the long side, I'll focus on stocks, but I'm not going to buy, Google because, oh, it's half the price of it was a year ago. It's a good deal now. No, I
Could
want to
go
see,
lower.
yeah, where
Yeah.
are stocks that are benefiting from this environment? They're making new highs,
Yes. The relative strength.
yeah, all that stuff. And it just, make your life easier. There's no reason to fight. And that's the toughest thing. It's a riptide. Why fight the riptide?
For sure. For sure. I love that. Now, how do you handle stop losses?
So it's a good question, and I do think that there's a couple things with stop losses. one of the guys I work with, Henry, and I think he's got the best philosophy about this, is when we're trading options, he'll trade a position size that if it goes to 0, that equals a stop loss.
Okay.
So, okay, so I'm willing to risk $1,000 on this trade. Great. I'm gonna buy 5 calls at $2. If it goes to
Mhm.
0, I lost. That was my max risk, right? And so
Sure.
I really like that idea because of all those things where you can hold through crazy swings. Like, oh my gosh, the algos are coming to get me. Well, they're not going to get
Mhm.
me, because this is what I'm risking on the
Yeah.
trade, and it's super effective with spreads, and things like that too. The other side of that, if you're buying the stock, is I always think that um, every trading strategy out there typically will do better without stops in place, which I know
Okay.
sounds ridiculous, but it's true if you're in back testing. And so the idea is that a lot of times, if someone is getting stopped out a lot, if you cut your position size in half and double your stops, that'll often fix the problem. So instead of 200 shares with a dollar stop, 100 shares with a $2 stop. So you're
Mhm.
risking the same amount, but you're giving the market. So I always say you have to have a stop. By default stop loss, you've got to be out of the average true range of the day.
Okay.
So my default would be 2 times the average true range. So
Okay.
if Tesla has an average true range of 8, if you don't have a stop of 16, you are basically begging to get, you're
Sure.
going to get stopped out, right? So the thing that is tough about that is everyone thinks, like, not everyone, but a lot of people think, oh, well, if I'm trading smaller, I'm not going to make as much money. But what happens is that when you trade smaller and widen your stops, your equity curve starts to look. I got it on screen, right? I got to go
Up
back.
and to the right.
Yeah,
That's what you like to say, up and to the right.
yeah, up and it's a huge difference. And so instead of focusing on, oh my gosh, I'm going to trade smaller, I might make less money. But what happens is you get more consistent. Your equity
Right.
curve looks better. And really at the end of the day, that's our main goal, right? As a trader,
Mhm.
is as an equity curve. It goes from the lower left to the upper right. Nothing else really matters. And that's my feeling on stops.
Yeah. No, I like that. I think the most important thing is just defining the risk, right? Because if you are going to take on, if you're going to completely nix your stop and just give the position the opportunity to play out, as long as you've decided, like, this is the amount of capital that I'm completely willing to lose, then that works. And I think it works as well in a market that's very volatile like this. Like, we'll have back-to-back days where, like, a single daily candlestick on the index will look like, "Oh, it's game over here, like, we're going down hard," and then the next day, complete euphoria will take over. Like, we are just in that kind of market where you really never know, and I think there's a difference between going in and deciding, "I'm not gonna have a stop, I'm gonna have this be a full risk position," versus like, "Oh, I'm gonna take on a full position, and I'm gonna cancel my stop and just let it play out," but then you have double the amount of risk there, and you just change your mind. So I think the planning aspect of that is most important.
Yeah, and totally. And if it's one of those things where, again, whatever the number is, it's different for everybody, right? It's like, okay,
Mhm.
I don't want to lose more than $1,000 today. Awesome. You can do one huge position with a tight stop and see if that works. But if you hit it, you're done. And that's really the key. And so I think
Mhm.
part of it is just really understanding that whole live to fight another day.
Mhm.
It's coming back from losing a couple percentage points on your account is easy to overcome. If you lose, and this is always an analogy, if someone, if you lose half your account, you've got to double it to get back to even. That's
Yep.
kind of like, wow, that's a lot. And the other crazy thing is that if you average 1% a day, 1% a day, and if you're trading options, 1% a day, it's the consistency part is hard, but 1% a day
Sure.
is not a lot on options, right? That's like 10x. You 10x your account the year.
Mhm.
So it adds up, and it's just understanding that the little gains add up. It's like compounding your, compound interest every day instead of every year.
That's the fascinating thing to me because 'cause I've been guilty of this before, right? 1% a day grows into something beautiful. We've all seen the little calculator, we've all done the math.
Right.
1% a day blossoms into something amazing. But I think we become our own worst enemies when we continue to strive for greater percentages all the time. And in not achieving that, we see it as like a failure. So we continue to trade to reach that, and then we end up negative. And then you look back and you're like, okay, well, yeah, I had a 6% day on Monday, but then I lost 10% on Tuesday. You know, there's a lot of you can make a lot of money and lose a lot of money, or you can consistently make a little bit, and your mental clarity and your mental capital is so much better that way.
Yeah, and the other thing about this too is that we were talking earlier about just kind of that sometimes there's just that, oh, I want to be in a trade, kind of a
Mhm.
thing. And the thing about what I like about doing something where it's like, okay, let's just say a goal is 1% a day. Well, that also it starts structuring a lot of things. Whereas like, okay, well, if I'm going to make 1% a day, how much am I willing to risk? If I make 1%, do I stop on the day? So what I've found is that what really helps in situations like this, and especially if you're trying different strategies, and I know not everybody's able to do this, but if somebody is, it's like, okay, you know what? I'm going to set up a couple of different accounts. And on this account, I'm doing what my goal is 1% a day. I'm going to do a spread on the SPX that's $5 wide, 2 contracts at a
Mhm.
time. And that's all I'm going to do here. Now on this account, I can do whatever the hell I want. And let's compete and let's see where we are in 6 months.
Fun.
And what really gets interesting like that is that it's in your face. And typically what happens, and not always, but typically what'll happen is, let's say at the end of 6 months, it's like, wow, this little rinky dinky 1% account, I mean, it's up 300% or whatever the number is.
Uh-huh.
And this other account, I'm still where I started. I had these huge wins and these losses, and and it starts to sink in like, oh, this is the long game. I can,
Yes. There's so much peace that comes into accepting that this is the long game. It's really when we try to reach, I know you've said before, trading for cash flow instead of wealth, like treating it as, it's not my get rich quick one day kind of thing. Like this is something that's designed to be sustainable. I think that just alleviates so much pressure.
well, and it's important to understand the difference between like trading and investing. And so in investing, and so I'm a huge fan of, if you make money trading, put it into like real estate. That's an investment. Put
Right.
it into a stock that pays dividends. That's an investment. That stuff I don't want to see. I don't want to manage it.
Yeah.
But but trading is a skill. Trading is not investing by any stretch. It is a skill. And it's funny, I'll use golf analogies, even though I think the last time I played golf was 3 months before my first child was born. But who has 5 hours in a row now?
Right.
Um, but the idea with golf is always you're only as good as how mindful you are on your current swing. And so, you go and you hit the ball and, it goes down the fairway and that's great. But if on the next swing, you're not focused, it's going to go off into the woods. And it's the same thing in trading. So the thing in trading is that instead of trying to make money, if you think of it as golf, like, okay, on every trade, I'm trying to improve my swing. On every trade, I'm trying to improve my skills. And then it becomes a different game.
Hmm.
The trying to make money, that's the road to disaster. But
Yep.
I literally want to improve my skills on every trade that I take. Okay, great. Then you're mindful, you're analyzing it, you're writing down what happened, what went right, what went wrong. And that's a lot different than I'm going to try to make some money today.
Totally. I want some bangers. I want some tendies. What do you
Yeah.
call them? Like 10 baggers with all those flashy Weeble like percentage gains and stuff that I think
Yeah.
are
Wall Street bets is,
Wall Street bets.
it's interesting because obviously there's when stocks go insane like GameStop or AMC, those happen, but it's rare. But it's,
Hmm.
it's important to understand that, yeah, something like that's going to happen. Um, but the idea of, say, getting enamored with an AMC and it's going to go to the moon and you just put all your trade on that and you just wait and, and the denial of what's really happening out there, right? That's a lot different than I want to improve my skills,
Yes.
and become a better trader on each and every trade.
As James Clear says, and this is one of my absolute favorite quotes, he says, "You don't rise to the level of your goals, you fall to the level of your systems."
Yeah, that's such a great quote.
It's so good. It's so good. Two more questions for you,
Okay.
and then I'll let you go. First off, what advice would you give to somebody who's trying to grow a small account? You know, let's say a $5,000 account, they want to play options. What kind of expirations, what kind of position sizing, any general advice that you would have?
So I think for stuff like that, I think it's good to take a portion of it. Let's say $1,000. And you can do it in the same account, and
Mhm.
that's the money that you use to build up a skill. So maybe that is you're doing one trade a day. It's like, okay, I'm doing this and I'm doing this, or whatever that is. but then use a larger portion of it, 3 or 4,000, where that is more swing trades. And it is
Okay.
understanding and defining. Now, and with options, always give yourself the gift of time. And so let's say there's a daily setup, whatever the stock is, and it's like, wow, this looks good. This trade may last 3 days. Great. Well, don't get an option that expires in 7 days. Get an option that expires in 60 days.
Mm-hmm.
And the reason for that is that if it doesn't work, that option is not going to be too horrible, right? It's not
Not at
going to,
all.
it's going to still maintain a lot of that premium. And so it's very forgiving. But I do think in a small account, you do want to have some of those bigger hits. It does help. 1% a day is great.
Mhm.
But realistically, also that's great when you have a larger account.
Sure.
So it's one of those things where it's like, it's patience. And this is setting up great. Oh my, wow, my account went from 5,000 to 7,000 over the course of the last 30 days, and that happens once in a while. And so what I always found in trading is that if you're getting into a groove, it's kind of like little wins, little wins, little loss, little wins, little wins, little loss, decent win. Wow, my
Yes.
account just up leveled. Okay, then you're back into the same little win, little win, little loss. Oh wow, look at the setup that came up.
Mm-hmm.
And it does change once you get, there's no way around this, but trading a $50,000 account gives you a lot more opportunities than a $5,000 account, right?
Naturally.
That's when it's like, wow, this is money that I can use to pay rent. I can start taking money out. I can buy things or keep growing it. And so there is kind of that, I always say the 5 to 50 is the journey. And then
Mm,
and then at 50, you start to have choices and you start to decide more of, okay, what do I want to do with this?
I love that. And I feel like that should be even more inspiring to people who are trading smaller accounts to stick to the journey to build to get to that point.
Yeah, and also just being careful. We were talking earlier, and I went through this too. Is that, man? I've only got a $5,000 account. When I get to 50, then I can do this, and then I can do this, and then start taking crazy risks to get there.
Mm-hmm.
If you're patient, it'll happen. Whether and and honestly, if you take some crazy risk and it happens in a month, you're screwed anyway.
Mm-hmm.
Like because it's kind of like, oh my gosh, now I'm going to do, and it's going to go right back to 5. And
For
so
sure.
it's but it'll happen. It's just being patient. It's there's a saying, time is relative, right? And you don't understand this is when you're younger, but as you get older, it's kind of like, I'll go back and look at like, okay, 20 years passing is kind of the same as 2 months, once you do it. So the time happens, and just let it play
Mm-hmm.
out and be patient. And it's not, it's a strange thing, but you understand it as you kind of get older. But it's like, oh my God, 40 seems so far away. It's not. Just be patient. And
For sure. I think self-imposed timelines are our worst enemy in a lot of ways because sort of that pressure that they apply is what gets us to sort of break from the process and not, trust the journey and the time that it takes.
yeah, and it's a fine line. There's a saying that I really like, is that patience is a virtue, but impatience brings greatness. It's like,
Mm,
okay. And it's a fine line, because if you're too impatient, right, it's going to break things. But
right.
if you're too patient, then essentially you just wait and never take a chance. And
Sure.
so there's that fine line of, you know, you want to be driven forward by the impatience to kind of get to where you want to go, but have the patience to let it play out, let the journey play out.
Absolutely. All right. My last question for you. 2023, we're in the beginning of
Right.
March. What are you envisioning the year might look like? Like, do you think we're just going to have a bunch of range days? We're at a very pivotal sort of point in the market where the bulls are drooling, the bears are drooling. Everybody wants this one outcome of either like we're hitting lows or we're hitting all-time highs. Like what do you anticipate?
I think we're going to be stuck in the range from the dark depths of fiery hell. And
Oof.
I think it's very tradable. I don't think the market is going to collapse, and I don't think it's going to break out. Um, it's, if you look at a monthly, go and look at like a monthly chart of the NASDAQ, and you think of it as a 5-minute chart. And it's all of a sudden, it's kind of like, oh gosh, that makes more sense. You had this big run, and now we're just going to kind of be range bound. But
Yeah.
I do think that we'll be trading in between the August 2022 highs and the June lows. So,
Okay.
that's a big range. That's like
Sure.
4,200 SPX down to like 3,600 or something like that. And so I
Sure.
think we'll test both of those levels. I think that the idea, so there's another thing that I watch, and this is a little random, but this is also why I don't think we're going into some, nasty recession. There's this 18 and a half year real estate cycle. I know it's like, what are you talking about real estate for? But I'll get to that. And it's happened every 18 and a half years for like the last 400 years. And this is documented in this book called The Secret Life of Banking and Real Estate. So it's the most boring title book ever, but it's a really good book. But and I met this author in London, like in the early 2000s, and he was talking about, oh yeah, and in 2008, this is when the next real estate crisis is going to happen. I'm like, yeah, whatever. Okay, we all know how 2008 played out, right?
Sure.
So based on this work, the next 2008 is going to be about mid 2026, and that's when the credit tightens up and real estate actually has its day. And so I obviously don't know if that's how it's going to play out, but
Sure.
based on what I've seen, the idea that we're going to go into some crazy recession now, I don't think so. But I do think that things will, culminate that in, mid 2026, we could see some other kind of 2008 flush, and it hits real estate and it hits stocks. And so I kind of look at it as, my oldest son is 17. I'm like, this is perfect. When you graduate from college, real estate's going to be in the shitter, and you're going to have some opportunities to, go in and buy some stuff.
Interesting. Well, I'll go ahead and mark that on my calendar. I won't hold you to it 100%, but I'm gonna keep a lookout for it.
I love that you're gonna have it on your calendar.
Yeah. I'll
Real
wake up
estate
and
crash
be like,
imminent.
oh, it's the day. Oh my
Yeah.
God, John Carter is like the next Nostradamus. Amazing. Well, thank you so much. Like I said, I have loved reading your book. I mean, it's really just the perfect combination of psychology and strategy and humanness. And it's really just very no bullshit. It's very like direct and honest and relatable. And I've had a blast reading it.
Well, it's awesome. I appreciate it. And I think at the end of the day, especially in trading, is that we're all here to help each other. So if my experiences help you and your experiences help someone else coming down the line, that's, I think it's us against the machines. So might as well help each other out.
Thank you so much for coming on.
Yeah, thanks for having me.
All right, guys, that was a fantastic show with John Carter. I really appreciated picking his brain. And I know he said before that the trading world is really the best psychologist that you can have. There are emotions, there are circumstances, there are things that we have going on in our own lives. And none of it really comes through quite the way it does is when you're trading and you're really forced to look into why you're reacting the way you are and really just learning more about yourself. So really loved all of his insights. And yeah, I think there's a lot to learn from somebody who has had this many years of experience in the market, has gone through the massive drawdowns, has gone through the recovery, has sort of learned to sit days out in the market. It's very, very tempting to take a trade every single day. Every single day. I know a lot of people are just staring at the screens and staying glued to the charts and sort of like imposing their will on the market to do something. Especially if we end up having more of a range type of year ahead. I think it's super important to kind of take a step back and look at, where can I really maximize my mental capital? Where can I maximize my strength and my focus to really take the best setups and not just trade every single day because I feel like it or out of boredom. So a lot of great things learned. We have another fantastic episode coming up next week. Denise Shull will be joining me. She's another fantastic author, and she was actually consulted with Wendy from Billions, which I know you've all seen that show. So she provided a lot of insights to that character. And yeah, I think it'll be fascinating to pick her brain and learn some things there as well. All right, guys, thank you for tuning in, and I'll see you next week on State of Flow.